Today, Bitcoin struggles to hold the $113,000 level as investors analyze risks in the broader market. Jamie Dimon weighs in on use cases around stablecoins. And Santiago Roel Santos of Inversion discusses what he expects from crypto in the fourth quarter. Welcome to CNBC's Crypto World. I'm Brandon Gomez. Crypto markets mostly holding steady this morning. As of noon Eastern, Bitcoin was little changed, hovering just under $113,000. Ether rose 0.3% to 41.83. Meanwhile, the Trump family-backed World Liberty Financial Token fell more than 5% after co-founder Zach Folkman reportedly said during a speech at Korea Blockchain Week in Seoul that the DeFi platform plans to launch its own debit card. Okay, let's talk about the top stories. Publicly traded design company turned Solana treasury, Forward Industries, plans to tokenize shares of its stock. Yesterday, it announced its partnership with fintech firm Superstate, allowing investors to tokenize its share on the Solana blockchain. The announcement also mentions Forward's plan to take equity in Superstate as part of the agreement. This follows the company securing more than a $1.5 billion commitment earlier this month for a Solana treasury. As of noon, shares of the company jumped by around 12%. Next, JPMorgan Chase CEO Jamie Dimon sat down with CNBC TV 18 at the JPMorgan India Conference 2025, and among the things he discussed was crypto. When speaking on stablecoins, Dimon said he's not particularly worried about them competing with banks, and sees some use cases for the technology. He also said banks are exploring whether they should have a consortium as they look to get involved. This comes as TradFi firms look to get more involved with blockchain technology after the passage of the Genius Act this summer. During an earnings call earlier this year, Dimon, who's been a skeptic of crypto, acknowledged JPMorgan would be involved in the stablecoin space. All right, let's turn to crypto markets for our main story. I spoke with Santiago Roel Santos, founder and CEO of the crypto firm Inversion, about where prices are headed as we approach the final quarter of 2025. So let's start with the broader markets. Major cryptocurrencies have settled a bit this morning after a sharp pullback yesterday. What do you make of that drawdown? Is it a reaction to politics and a looming government shutdown? Is this still part of sort of the historical summer doldrums that we see in the season? What's your take?
Yeah, look, I mean, we just had a rate cut, and I think Bitcoin has had a phenomenal year, and I think the market is cooling down a little bit. I think if you look at futures, I think traders are bracing for continued volatility throughout the end of the year, and I think this is just normal. I wouldn't read too much into it. This is a volatile asset class.
I mean, and to that point, I mean, I'm thinking about sort of what are the biggest drivers of prices right now, overall, especially, right? So for a while, I mean, we've been talking about regulation. That was very much a driving factor. Do you think that that's still at play here? Or do you think sort of the macroeconomic headwinds and tailwinds are what are driving prices as we sort of look forward?
I think it's very much the latter. I think Bitcoin has entered into and is much more mature of an asset now. It is a global macro asset. You see more companies put it on the balance sheet, pension funds, RIAs. It's become easier for people to have exposure to Bitcoin. And I think it's a direct correlation to rates and the overall macro picture. And I think as Bitcoin has matured, we can expect it to continue to be sensitive to macro shocks and the broader economy. I think it's very normal, very much the latter.
But then you still obviously have investors wanting to monitor and see where things go by way of regulation, right? We obviously have a much more friendly administration in the White House towards the crypto market now. Are there still some regulatory headwinds? Are there still some tailwinds that investors should be focusing on, that you're personally focusing on when it comes to figuring out where prices might go from here?
Absolutely. Look, the reality is we had a total 180 on the regulatory environment last November, and we have finally an administration that wants to regulate it. You have the Genius Act, you have David Sachs at the helm. So there's a broader, very concerted effort across agencies to continue to regulate this industry. And so I think as we look ahead, there's going to be tokenization of stocks and stablecoin regulation. And I think that bodes extremely well for the industry. If you were to look back over the last 9 months, there's sort of this unlock of friction and release of this anxiety in the market. And finally, you're seeing a lot of large institutions and companies want to get exposure because they've been doing their homework for the last couple of years. And finally, they can have exposure to the asset class. And that's very positive, and that will continue to be a major tailwind for the industry.
You mentioned sort of the 9-month ramp to the point that we're at now. I mentioned sort of the seasonality of the summer doldrums, that typical period when crypto slows down. Now, as October approaches, right, first day of fall, we're heading into a new season. We're going to be heading into Q4. We're getting into some of the best months for crypto historically. Right now, Bitcoin and Ether are up more than 20% for the year. Do you expect that momentum to continue, or do you think that part of it is already priced in with that run-up that we've seen over the summer?
I mean, it's a $1 trillion question, really. I think the macro plays a big picture here. The things to monitor are continued ETF flows. I think that is the primary barometer here. We've seen a steady inflow of into these ETFs. There's still days where you have meaningful outflows, when there's volatility, when there's a jobs report, and macro will continue to play, a big picture here. But I think, Bitcoin is much more mature as it relates to ETH and some of the other Solanas of the world. I think that's a bit more secular, in my opinion. One of the things that is quite overlooked, Bitcoin and speculation is all at the center of this industry, but you're going to start seeing more companies quietly start adopting this technology. This is Figures of the world that just went public, and Circle and Coinbase, Nubank, Robinhoods of the world that are realizing that, Bitcoin is great. It serves a purpose as a digital gold, but there's a vastly more interesting story, which is, blockchain technology is real and it will create a lot of value for businesses. And so I think that's something that is very overlooked. We're going to enter the year and not in a not too distant future, you're going to see more and more companies start adopting this technology and go public and say, listen, we implemented stablecoins and we're now vastly more profitable. It changed the unit economics of the business. And that's something that is quietly happening in the background, and that's independent from macro.
You talk about more companies, the institutional buy-in. I want to shift gears a little bit because your company, Inversion, looks to integrate blockchain technology into traditional businesses, right? I'm curious, what the appetite for U.S. companies has been, to marry blockchain or tokenization into their business, right? That was a big deal during the 2021 bull run, and then of course it dropped off during the crypto winter. But now that we have these regulatory changes we already talked about, there's new momentum on the crypto front. I mean, how eager are businesses overall in terms of the ones that you're speaking with to explore this sort of technology?
It's very real. We've come a point where at the board level, people are eager to understand not so much how this works, more so how to implement it. And, 2020, 2017, it was all a pipe dream. It was an idea, it was research papers and research labs. The reality is this technology has come to a point where it is ready to be deployed at scale. And that's what's really exciting. The key limiting factor, again, was regulation. When you go talk to a CEO or a board, it's just too much risk, career risk or reputational risk, but that really is no longer the case. So a lot of the companies that we talk to, obviously, we take a private equity approach. We want to buy businesses and make them more efficient in the same way that the internet, did that over the last 20 years, moving companies away from spreadsheets and into, Excel. And we see the same transformation, and it's an incredibly exciting time because, it's no longer the crypto's a scam, or, hey, listen, we heard about this regulatory stuff and it's no longer, it's too much of a reputational risk. It's a total 180. CEOs, boards are very excited to learn about how to integrate stablecoins and blockchain infrastructure into their businesses. Maybe not so much yet, but I think a key trend next year will be much more excitement. Right now, AI is all the rage to capture value. I think you're going to see more and more companies come out saying, hey, listen, this thing called blockchain is very real, and we can drive a lot of value in the same way that we're thinking about AI to drive efficiencies in the business.
Well, and you talk about sort of scaling the operation, right, appropriately. And so I want to sort of talk about the tokenization front too. I mean, it seems like that's the thing that has the most hype right now, but also we're hearing more debate around, how it should be rolled out. Maybe part of that is the regulatory conversation too. Some exchanges have asked for regulation there. You have senators potentially looking to add some caveats to tokenized securities in a market, structure bill. What regulation do you think needs to be done there when it comes to tokenization?
I think it's continue to understand, access, right? And if markets are going to be 24/7, 365 open to not just a certain type of investor, it's important to understand who that type of investor is, and price discovery, making sure that these assets, as they get tokenized, there's efficient and orderly markets and also information disclosures, right? Which is one of the things that I think, as I think about the overall crypto regulation, you've had the Genius Act really regulate stablecoins. Tokenization is one of those things that I think information disclosures, in the same way that you have the SEC and quarterly and 10Ks and 13Fs, that sort of information disclosure needs to happen in crypto and tokenization land. And so right now you're just seeing plain vanilla tokenization of things like US treasuries. But as we expand into more bespoke things, you're going to have much more disclosures and investor protections.
Okay, that's all for Crypto World today. We're back again tomorrow, and we will see you then.